Welcome to TradeTheMBI.com. This is John's reported for the 14th, and we had a nice move below the ABM green, which we were talking about. Well, we were consistently from way up at the top of things short, but we know that a move back above the green could signal a positive move. However, we're seeing from the DOC here on the daily continuation of decline in the red. However, we're getting to a point where we're getting into that natural oversold, and we really haven't dipped that far. So overall, it remains in a short signal, but relatively bullish given the fact that you haven't seen much of a decline, given where things are. And I think a lot of this is just the uncertainty and the volatility of what's taking place. There's been some rotation already, and that's just normal. You got to expect that. But likewise, we know that after the election, the likelihood of increased price is still a much greater percentage than otherwise, and obviously if it's a Democrat elected, it goes up more. If it's a Republican, it'll be a little less. So yeah, at the end of the day, it just still means new highs. NQ, yes, the economy is still weak, blah, 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 but the reality is, again, like I've said, there's nowhere else to put your money. They're not raising rates. It's just not even feasible. The only negative impact would be the continued conflict with Russia, if that begins to escalate further than it already has. And you can see the Dow making a similar move. If we look at the NQ relationship, the NQ is slightly above the ABM green. So we can see that we've almost achieved a recalibration. All the markets have sort of evened themselves out, put themselves right back into a consistency. The potential for gold to begin making a move, we would need to see that orange decay a little bit more below the red to give us a DOC type signal, shakeout continuing to fall. The only advantage here was the short pop coming from the fact that the extreme histogram went from super oversold to a little less than oversold. That's the difference that you're seeing there. And likewise, here's where you would see it right here with bonds, slight recovery. Just a ridiculous value for what they're at right now, but it's a continuation ideal that no, there's not going to be any rate increase. And USO holding up pretty well despite the fact that it's been in this slight DOC spread. It hasn't been significant enough yet. You would need to see orange come back down, and you need to see a greater spread between the red and cyan in order for it to be more significant. I think it's just going to hold up around the ABM values, so put them up right there so you can see them. Not that complicated from that standpoint. And the euro back and forth, right at the bottom of the range. We're still at like the 110 range. We jumped almost up to 110.5. I still think that we've got a potential to move right down here to that bottom range in the 109.6 area. And then it becomes interesting because this whole Brit exit thing's starting to explode a little bit. Demands are going to start being made, and then there's going to be a whole battle as to what is actually left in the EU and how the value of that currency will be handled. Let me shrink this a little bit from our intraday standpoint. So we had that short, very clean, way back over here. Led to our cascade, and then we were talking about this on the Skype chat. We had a couple of signals that you would look at where obviously we ended up with the dip below the red DOC with the orange. Fine, that's our primary signal. Secondarily, you can always see too that the shakeout, I mean, we're down in the minus 23 range, and usually we want to be above that. 12.5 is usually the beginnings of a sustainable recovery. You can still get a move that starts, relatively low, but still. Getting back to this, we never dipped with the steel back below the 7.5, so no signal there. Then we moved back again, dipped below, and this time, it did move below 7.5, but as it did that, the histogram was below the yellow line on the shakeout here. That's a no-go. So we continued to cascade, and then finally re-signaled again. This time, produced an actual buy, because look at this, we're also, where was that shakeout? Were we inside of 12 or was just around there? 8. So perfect. Inside of the yellow line, that's an actual signal. Even with that signal, we still deteriorated in price. Where was that actual signal? Is it 21.12 and it dipped to 21.09. Before it started working its way back, and then we ended up with a secondary signal. The reason this one's steel is because the red DOC is not below the negative 13.5. This is happening at a higher level. However, the orange did dip below the 13.5, which is also an important one. Sometimes you'll get them dipping within, and those are usually even a little bit less effective. And also the histogram was still above the yellow line at this particular point. Now, this one, even higher, the market dipped a little. That was up at 16, and we ended at what was the lowest point, dropping back down to 10, which was still relatively the same as the signal right here at 1250. So not that big a difference, not a whole lot of heat, a couple of points. What's interesting is once you start seeing the brown right here on the shakeout rising, and then also the azure, that's usually an indication that you're about to build some momentum to it. It took a little while. Once we broke back to the positive here on the shakeout, yeah, it continued to carry itself away, and then we ended up with the cyan under red, not an issue. And likewise, a little bit of a weakness right here when we were below the red DOC and the orange makes that pivot. We've seen that before as a slight negative. That happened right up here. So we were up at 28, peaked out a little bit at 30, and has cascaded back down a little bit. So that was an interesting precursor right there. And then obviously we ended up with a DOC spread right here at probably about the same value, 27.50. So pretty close to the same. Ironically, it's just one of those occurrences where a lot of these algorithms will begin an initial move, and it takes some time for them to absorb supply, and you'll get a secondary trigger. And the same thing happens with the longs. You can see they were starting to accumulate, needed some more, and once they have enough supply eaten up, there's no new sellers when they retest, and then you see a progression to the upside. So all in all, I think the market's working much more orderly. I think that everybody's active in this scenario. All the panic talk is just that, panic talk. You can ignore it. Don't even bother with it. It's not even worth your attention. Just stick with the signals. Keep it simple. I was asked about these changes. The problem I have with the program on these is that I have to have all of the buy signals and their exceptions, variations, all in at the same time in order to put them on the program. Otherwise, it messes up how things flip and turn, so it would throw off the entire thing. So it has to be completely done in order for it to pop on there. And it's just one of the realities of the programming and what it takes. So, but keep at it, and if there's an adjustment that I can make that will lock it into just one of the zones, I'll try that one and see if I can then just limit it so that if we have an update, at least any one of the numbers, you'd be able to see the new buy signals that come in and or sell conversions after them. There you have the basics. As always, though, continue to look for me in the Skype chat. We'll keep putting up charts in these various situations as they take place. Trade well.